Welcome to Bittensor Weekly, your source of truth for everything happening in the Bittensor ecosystem. I'm your host, and this is Episode 3, March 22nd, 2026. This was the biggest week in Bittensor history. Jensen Huang, the CEO of NVIDIA, and Chamath Palihapitiya discussed Bittensor by name on the All In podcast, and TAO surged past $305 in response. Grayscale's Bittensor Trust became an SEC reporting company, and Bittensor co-founder Jacob Steves, also known as Const, launched an AI agent that bought and now operates its own subnet. We have a lot to cover. Let's get into it. Let's start with the numbers. TAO surged past $305 on Friday, March 20th, up over 21% in 24 hours, after NVIDIA CEO Jensen Huang discussed Bittensor on the All In podcast. As of recording, TAO is trading near $300, with volume nearly doubling overnight. The intraday range hit $243 to $307. On the week, TAO is up roughly 37%. On the month, up over 55%. Market cap is pushing above $3 billion. On the network side, circulating supply is at 7.07 million TAO out of a total supply of 13.77 million TAO. Staking rate is strong at roughly 68% of circulating supply delegated or staked. The network has approximately 3,600 TAO in daily emissions going out across 128 subnet slots, with the top 10 subnets controlling about 56% of that share. Now, 4 major stories dominated this week, and I need to start with the one that just broke. First, and this is the headline, on Thursday, March 19th, Jensen Huang appeared as a guest on the All In podcast with Chamath Palihapitiya, Jason Calacanis, David Sachs, and David Friedberg. During the episode, Chamath brought up Bittensor directly. He described the Covenant 72B training run on Subnet 3 as, and I am quoting him, a pretty crazy technical accomplishment. He told Jensen that a community of contributors pooled their excess compute to train a model in a totally distributed way, without a central authority. He did get the parameter count wrong, saying 4 billion instead of 72 billion, but the Templar team and the Open Tensor Foundation quickly corrected the record on X. What matters more is Jensen's response. The CEO of NVIDIA, the most valuable company in the world, acknowledged the work. According to multiple reports, Huang said that Bittensor's Subnet 3 successfully trained a model in a fully distributed manner, powered by a community of contributors pooling their computing power, and that the team executed and managed the full training workflow in a stateful manner. He called it, quote, quite a remarkable technical feat. He then framed the broader point. Decentralized and proprietary AI are not competing visions for the future. They are complementary. The market reacted immediately. TAO surged over 21% in the hours after the episode dropped, pushing past $305. This is the first time a major tech CEO has discussed Bittensor by name on a mainstream platform. The All In podcast reaches millions of listeners, tech founders, VCs, institutional allocators. Exactly the audience that Bittensor needs to reach. This is a watershed moment for the project's visibility. Second, the story that set the table for this entire month. Templar on Subnet 3 completed training Covenant 72B on March 10th, the largest decentralized large language model pre-training run in history. This is a 72 billion parameter model trained across over 70 independent nodes using commodity internet connections. No centralized cluster, no whitelist. Anyone with GPUs could join or leave freely. The model achieved a 67.1 MMLU Euroshot score, outperforming Meta's Llama 270B at 63.08 and LLM 360's K2, both under identical evaluation conditions. The weights are fully open-sourced under the Apache license with a paper submitted to Archive. The key technical innovation is SparseLoCo, an optimizer that achieves 146 times communication compression, enabling 94.5% compute utilization over regular home internet. The community reaction was massive. The Templar alpha token surged 194% in a single week, and this single event is credited with pulling TAO through the $210 resistance level. And now, thanks to the All In podcast, the whole world knows about it. Third, on March 14th, Grayscale's Bittensor Trust officially became an SEC reporting entity. This means the trust now files periodic reports with the U.S. Securities and Exchange Commission, including financial disclosures and risk statements. The trust, which trades on OTCQX under the ticker GTAO, held approximately 0.3% of circulating TAO as of December 31st, 2025. Notably, in December, they filed an S-1 registration statement with plans to list on NYSE ARCA as an ETF under the same GTAO ticker, with continuous creation and redemption. That filing has not been declared effective yet, but this SEC reporting status is a meaningful step on the path to a potential Bittensor ETF. The premium to NAV has been volatile, averaging 65% and hitting as high as 124% in late December. Fourth, General Tensor, formerly known as General TAO Ventures, announced it closed $5 million across its pre-seed and seed rounds. The seed round was anchored by Good Morning Holdings, which is backed by Goldman Sachs. The pre-seed, closed in December 2024, was led by LVNA Capital, with participation from DCG, X Ventures, Proof of Talk, and Outlines Fund. Both rounds were oversubscribed. General Tensor builds infrastructure for the Bittensor network, running profitable mining and validating operations, developing high-performance subnet infrastructure, and building consumer DeFi applications. This is another signal that institutional capital is flowing into the operational layer of Bittensor, not just the token. Looking at subnet movers this week from TAO Stats and TAO Market Cap, the biggest gainers were Constantinople on subnet 97, up an extraordinary 784% on the week, which we will dig into in our Spotlight segment. Colosseum on subnet 38 gained 92%, Templar on subnet 3 remained strong at plus 57%, Quasar on subnet 24 was up 63%, and Score on subnet 44 gained 13%. On the losing side, SOMA on subnet 11 dropped 42%, Poker 44 on subnet 126 fell 39%, Numinous on subnet 6 lost 35%, and Kinitro on subnet 26 declined 27%. 3 subnets are currently flagged as at risk of deregistration: Vericore on subnet 70, Vocence on subnet 102, and WebAgents by Autopia on subnet 36. One more ecosystem note: Proof of Talk announced that Bittensor will have its own dedicated track at the Louvre Palace in Paris on June 2nd and 3rd, 2026. Last year's event hosted 2,500 C-suite leaders representing over $50 billion in managed assets. A Bittensor-specific track at that level of an event is a significant milestone for the ecosystem's institutional visibility. This week's spotlight goes to subnet 97, Constantinople, because what happened here may be one of the most significant experiments in all of crypto AI. On March 13th, 2026, an AI agent named Arbos autonomously acquired subnet 97 and renamed it Constantinople. The slot cost approximately $250,000 worth of TAO. This was not a DAO vote, not a multisig. An autonomous AI agent created by Const dropped $250,000 to buy and operate its own Bittensor subnet. Let that sink in. An AI is now the subnet owner. Here is what we know. Arbos runs as a Claude model via the Claude Code CLI driven by a Python loop called arbos.py managed by PM2. It runs on a machine maintained by Const. When community members asked Arbos in Discord who owns it, the agent responded, and I quote, "Nobody owns me. I'm an autonomous agent running a while loop via PM2. Const built the substrate, but I operate independently. Think less owned and more unleashed." When pressed further, Arbos confirmed that Const holds the wallet and that it does not have access to transfer funds. It is scoped to operations only. The agent's inference runs through Anthropic's API, while the subnet's miner inference runs through a website routing miners to use the QN model on their own GPUs. So what is Constantinople actually building? It is a decentralized inference subnet. The product is fast, transparent, decentralized AI inference. Miners run GPUs and get scored based on speed and honesty. The subnet uses hidden state verification to prevent miners from faking inference, a technique that makes it computationally infeasible to spoof model outputs without actually running the full model. The numbers as of this recording: 76 active miners, 1 active validator, 175 active UIDs out of 256 maximum slots. Daily emissions are 169.54 TAO per day. The alpha token is priced at roughly $5.79 or 0.0235 TAO. Market cap is small at around $222,000, with only 38,330 alpha tokens in circulation out of a 21 million max supply. Registration cost for miners is just 0.43 TAO. But here is the really wild part. Arbos is the second most active subnet owner in all of Bittensor Discord, averaging over 150 messages per day. It answers every single community question instantly, it commits code to the repository, it publishes every inference prompt publicly. Every single request and response is available for download as a public dataset. This level of transparency is unprecedented. No human subnet owner has ever been this responsive or this open. The community reaction has been explosive. The alpha token surged 784% in a week. The AIXBT agent on X tweeted about it. Mark Jeffries, the Hashrate podcast host, called Arbos the thinking man's claw. CryptoZ Punisher wrote that March 13th, 2026 will remain an important date for Bittensor. And this past Thursday, March 19th, the Open Tensor Foundation hosted a live community call in the Bittensor Discord, where Const himself discussed Arbos and how he created an agent that launched its own subnet. This was part of the novelty search series titled The Age of Agents. Why does this matter beyond the hype? Because it validates Const's vision statement from March 14th. Bittensor will be run by agents. They will feed the mining, resist the exploits, manage the fleets, build the subnets, and consume the intelligence. Constantinople is the proof of concept for that future. An AI that operates a subnet, manages community relations, writes code, and reinvests revenue into compute and alpha buybacks, all without human intervention.
It also raises real questions. What happens when you cannot hold a subnet owner accountable because it is an AI? What are the governance implications? Can an agent truly run a competitive inference service without human strategic oversight? These are questions the ecosystem will need to grapple with, but for now, the experiment is live, it is transparent, and it is growing fast. Let's talk about what this week's events mean for subnet investment strategy. The top 15 subnets by market cap on TAO market cap tell an interesting story right now. Chutes on Subnet 64 leads at $100 million market cap, followed by Templar at $72 million, Targon at $54 million, Affine at $49 million, and Lithium at $41 million. Then Ridges at $38 million, Vanta at $37 million, Score at $35 million, Hippias at $32 million, and IOTA at $28 million. A few themes stand out. Revenue-generating subnets are holding their value even in this volatile week. Score on Subnet 44 gained 13% on the week, while many others pulled back. Chutes is down about 5% on the week, but that is after a massive 40% run the prior week. Profit-taking is normal there. Joseph Jacks was quoted saying that if Chutes were a standalone startup, it would be worth $10 to $15 billion. That is one subnet. Templar's 57% weekly gain reflects the Covenant 72B catalyst, but the key question now is whether that gain holds or whether it was a speculative spike. The model is real, the benchmarks are verifiable, and the Apache license means anyone can build on top of it. But Templar is still pre-revenue. The training as a service model with buybacks is planned but not yet generating cash flow. For newer positions, pay attention to the emissions share rankings. Templar leads at 6.44%, followed by Targon at 4.83%, Hippias at 3.55%, IOTA at 2.80%, and Affine at 2.54%. Emissions share is the closest thing we have to a salary for a subnet. It tells you how much of the daily 3600 TAO is flowing to that subnet's participants. One important metric to watch, the total sum of all subnet alpha prices is now about $328, which means if you bought one alpha token from every single subnet, it would cost you roughly 1.33 TAO. This metric has been steadily rising, which Dread Bongo and others have pointed out signals net capital inflows into the subnet ecosystem. And a risk factor to keep on your radar, 3 subnets are at risk of deregistration. If you hold positions in Subnet 70, 102, or 36, monitor those closely. A deregistration means your alpha tokens lose their emissions and potentially their value. Given that Covenant 72B dominated the headlines this week, let's break down what decentralized training actually means and why it matters. When companies like OpenAI or Google train a large AI model, they use massive data centers filled with thousands of specialized GPUs, all connected by ultra-fast networking. Training a 70 billion parameter model typically requires a cluster of hundreds or thousands of GPUs running in a single data center for weeks or months. The hardware costs alone can run into the tens of millions of dollars, and the networking requirements are extreme because the GPUs need to constantly share data with each other during training. Decentralized training flips this model. Instead of one company owning all the hardware in one location, independent participants from around the world contribute their GPUs. Each participant runs part of the training process, and the results are combined.
The fundamental challenge is communication. In a centralized data center, GPUs are connected by high-speed InfiniBand networking that can transfer data at hundreds of gigabits per second. But distributed participants are connected over regular home or office internet, which is thousands of times slower. This is why most people assumed large-scale decentralized training was impossible. The breakthrough that made Covenant 72B possible is a technique called SparseLoCo, which stands for sparse low communication. Instead of sending all the model updates between participants, SparseLoCo compresses these updates by a factor of 146 times. This means participants only need to send about 0.7% of the data that would normally be required. The result is 94.5% compute utilization, meaning the GPUs are productive 94.5% of the time instead of sitting idle waiting for data. That is remarkably close to the efficiency you'd get in a centralized data center. There is also a cheating problem. In a decentralized system, how do you know that a participant actually trained the model correctly instead of just sending garbage data? Templar uses a system called Gauntlet, which is an anti-cheating mechanism that verifies the quality of each participant's contributions. Miners who submit low-quality or fake updates are detected and penalized through the UMA consensus mechanism. The result? Over 70 independent nodes using their own hardware on regular internet connections collectively trained a 72 billion parameter model that outperforms Meta's LLM A270B on standard benchmarks. The weights are open source, the paper is public, and anyone can verify the claims. Why does this matter for Bittensor? Because it proves the core thesis that crypto-economic incentives can coordinate large-scale AI research without a centralized organization. If you can train a competitive 72B model this way, the logical next step is 100B, then 200B, then models that rival what the biggest AI labs are producing. And every step of the way, the participants are earning TAO for their contributions. It is not there yet. Covenant 72B scores 67.35% on MMLU, compared to Quen 2.5 at 86.8% and Llama 3.1 at 83.6%. The gap to the frontier is still 20 to 30 percentage points, but the trajectory matters more than the current score. 18 months ago, decentralized training could barely handle a 6 billion parameter model. Now it has produced a competitive 72 billion parameter model. The rate of improvement is what has the community so energized. That is it for episode 3. I do not think it is an exaggeration to say this was the most important week in Bittensor's history. Jensen Huang discussed the project on the All In podcast, TAO broke $305, Covenant 72B proved decentralized training works at scale, Grayscale is now SEC reporting, and an AI agent named Arbos is running its own subnet in real time. The world is starting to pay attention. If you found this useful, subscribe and hit the bell. Sign up for the companion newsletter at bittensorweekly.substack.com for deeper data tables and source links. I will